Let's forget the XRP charts for just a moment. Seriously. The real story, the one that actually matters for your investment, isn't happening in the daily price swings. It's happening in the halls of power in Washington, D.C. So today, we're going to pull back that curtain and look at the political and economic forces that are truly moving the needle.
What we're going to do is step back from all the noise, all the day-to-day chatter, and look at the much bigger picture. We're going to explore the massive macroeconomic and political forces that are shaping the future of not just XRP, but the entire crypto market. This is the stuff the charts just can't show you.
So let's just get right to the heart of it. Why is the future of your XRP suddenly in the hands of politicians and central bankers and not traders? This is a huge shift in the crypto landscape, and frankly, it's a question that every single investor needs to be asking themselves right now.
What we're seeing play out is basically a perfect storm of pressure, and it's coming from three really powerful places. Now, any one of these would be a challenge on its own, but when you put them all together, well, you've got a massive headwind for the entire crypto market.
All right, force number one, and this is the big one, the U.S. Federal Reserve. They're in what's called a hawkish stance. All that means is they plan on keeping interest rates high to fight inflation. And look, in simple terms, here's how it affects you. When safe bets like government bonds are paying out well, people are just less likely to take a chance on a riskier asset like XRP. It's that simple. And this slide, wow, it really lays out just how intense that pressure from the Fed is. First up, you've got Fed Chair Powell basically telling everyone, hey, don't expect those rate cuts anytime soon. Then, bam, new data comes out showing inflation is way more stubborn than anyone hoped. And as if that wasn't enough, you have the nomination of Kevin Warsh, a known hawk, which signals this whole tight money environment, yeah, it's probably here to stay. It's a triple threat, and the message to the markets is crystal clear. The Fed isn't coming to the rescue.
Okay, so the Fed is creating all this uncertainty, but how does that actually play out in the market? Where can we see it? Well, the answer is right here, in the investment flows for exchange-traded funds, ETFs. These are the main gateways for big institutional money and even everyday investors to get into the crypto market. And this chart, it really shows you the scale of this investor pullback. In just 1 week, we saw over $52 million flow out of XRP ETFs. But here's the real story. That's almost nothing compared to the massive $1.6 billion that left Bitcoin ETFs. So what does that tell us? This isn't just an XRP problem, not at all. It's a market-wide retreat from risk, and it's being driven by those bigger forces we've been talking about.
All right, that brings us to the third major force in play, the regulatory battle that's heating up in Washington. You see, there's this huge fight coming over something called the Market Structure Bill. And honestly, this is a make-or-break moment for the entire crypto industry in the US. The outcome here is going to set the rules of the road for years to come.
And if you want to understand just how much opposition crypto is up against, just listen to this quote from Jamie Dimon, the CEO of JP Morgan. He straight up told US senators that if he were in charge, he would close it down. I mean, that shows you the deep-seated hostility coming from the traditional finance world. They are not just watching from the sidelines, folks. They are actively in the game trying to write the rules in their favor.
Okay, so we've got the Fed, we've got nervous investors pulling their money out, and we have this huge regulatory battle. It's a lot to keep track of, I know. So let's try to simplify it with a metaphor. Think of it like a big three-way tug-of-war for the future of crypto.
So let's break down this tug-of-war, right? On one end of the rope, you have the Fed. They're pulling hard with high interest rates, making those boring, safe investments look way more attractive. On the other side, you've got the ETF investors. They're pulling with their wallets. When money flows out, the crypto side of the rope gets weaker. And then, right in the middle, you have the regulators and the big banks. They're like the referees, except they're also trying to move the center line to help their own team win.
Now that we have a much clearer picture of all the forces pulling on this market, let's switch gears and talk about the potential risks. What's actually on the horizon? And let's be clear, this is not about making some wild price prediction. This is about being smart and understanding the real challenges that could be coming our way. So here are 4 key risks you really need to keep on your radar. First, a surprise move from the Bank of Japan could send ripples through the global markets, and that definitely includes crypto. Second, what if the US economy stays too strong? That could push the Fed to delay rate cuts even longer. Third, that big market structure bill could easily get bogged down in political gridlock. And finally, if we keep seeing money flow out of these ETFs, well, that's just a constant headwind the market has to fight against. Any one of these could seriously derail a potential recovery.
And all of this, it brings us to the ultimate question, doesn't it?
Will this immense pressure from the traditional financial and political systems crush the crypto experiment for good? Or is this trial by fire actually going to forge it into something new, a regulated and globally accepted asset class? The answer? Well, it's being written as we speak, not on the charts but in the halls of power.